Hey everybody, welcome back to Chart Request Live. Happy Monday to you. Quite a crazy day in the
Is it
markets.
a happy Monday?
Well, depending if you're long or short, right? But listen, plenty to talk about. Great place to be breaking down the markets. Great time to be doing it. And joined here with Sam Gatlin as always. And if you didn't don't know, I'm Patrick Denawilla, editor of the Chart Report. Anyway, Sam, what's got your eye?
Well, a lot of stocks are going down, Patrick. That has my attention here. We're looking at the S&P 500. Uh, it hit a bear market. If you use that 20% threshold earlier this morning, it has rallied back a little bit, but I heard a stat about this is the biggest range for the S&P 500 since March 2020. You know, we've gotten hit pretty hard uh, last week, but the ranges weren't nearly as large as they were today. You know,
You're
there
talking
was
about
that
like the intraday
the
range?
intraday range, yeah.
Yeah.
Yeah,
Uh,
so there was like some rumor that Trump was gonna delay tariffs by 90 days earlier, and then the White House came out and said that was fake news, and then stocks dumped immediately on that. But there's just, yeah, you can tell that there's a lot of emotion in this market right now, and every headline is driving the price action. It's really difficult to trade this action unless you're using, I don't know, 1 minute candlesticks,
right,
it's a mess. It's a total
right. I
mess.
mean, there isn't like a clear trend that's kind of come to light yet. But Steve and I were just on the phone, and I was just talking to him about 2020 and how that bottom. You saw a few days of these wide range candles like this, where we retested the lows, and you saw a lot of long lower wicks there. So it's entirely possible we see something like that, and we see a few days of this, these wide ranges like this. Um, but it's a good time to be flexible and a good time to not have too bold predictions, right?
Absolutely, yeah. Yeah, this is a good time to remember that the market is designed to fool the majority. We came into this year saying this was the whole market narrative was we have the most pro-business administration ever in Washington D.C. and anything can happen. You have to keep an open mind. Some presidents will put on crazy tariffs. Some presidents will do other crazy things, and we'll see this again in the future. um, this is just a great way to visualize human nature. Humans are crazy. I think that's the bottom line is uh, we just have to keep an open mind.
Yes, sir. Well, let's kick it off with the mailbag here. And I already see a few requests here in the chat, so keep those coming. But starting off with Dan in the mailbag, I would love to hear your view on Verisk Analytics. That's VRSK. And he says, under what condition would you enter a long, and how long would you hold in the current market environment?
Sure. So this is VRSK. This is a 38, let's call it $39 billion data processing services company. They are from New Jersey. New Jersey boys. So I already have this one fibbed out actually, and I started at the 2020 peak. That was a pretty significant level to fib from. That was a quick and dirty 32% corrective wave. And you can see that the market respected this 161.8 extension level. The market paused there in late 2020. Just danced around it for several years until it broke out in the summer of 2023. And you can see here, if we zoom in to the 261.8 extension level, this is really what has my attention right now. It looks poised to come down and retest this once again. The market's told us that this is support on numerous occasions. This 260 level is very, very important. I think you can buy a dip towards that 260 level, but I think you want to keep it tight, understanding that if price does resolve lower below 260, then this would be a confirmed distribution pattern, and that's not something you want to be involved in from the long side. But if you do get a dip to 260 and it holds there, I think you could look at the next extension level, 350. It probably gets it done within 3 to 6 months. That's how I'm seeing it, Patrick.
Yeah, I mean, makes sense, right? And seeing here a little bit of momentum divergence, as it's been making those highs, hasn't quite made new highs on RSI either. But like you said, the market's already told you that's an important level.
Yeah, look at this divergence on the 14-week RSI, Patrick. That is super clean.
Oh, yeah.
Good point out there. Yeah, so very likely to get a retest of that 260 level.
So next in the
yeah.
mailbag here, we got Baba. Worth looking at China here. I mean, China held up relatively well, and then these last couple weeks just getting killed with the rest of them, right?
For sure. I saw, what was it, the Hang Seng down 13%. Is that real? Is that a glitch?
I mean, I was just looking at FXI, and that was down, I think, 9%. And I saw like the Nikkei went limit down, I think, earlier today. So I mean, they're blasting them in Asia too. A lot of those areas held up relatively well that in the first quarter there.
So here's the Hang Seng Index futures, closed down 13% on Monday. So that's pretty severe. The S&P is not doing 13% in one day.
Right.
So yeah, over short time frames, you could say that China and Asia, Europe too, has been relative laggard. They've been the leadership group so far in 2025, but that is unwinding very fast here. And I think you can really mark this up as some type of failed breakout. The market clearly said that this 120 level was resistance. We closed above it in February, then gapped above it, held it for several weeks, and now here you are decisively back in the range. I would look towards this VWAP anchored to this low, the bear market low, which was on October 24th, 2022. I think price is just going to be attracted to this like a magnet. So Baba's likely heading towards that 91 level. Let's see if it can hold there, but that is the last line in the sand, in my opinion. If price slips below that, then it's likely heading back towards this either 66 level or potentially even lower towards 57.
Yeah, and it had a nice move after earnings a few weeks ago, but it's completely given that back. So
that's the thing, Patrick, is it looked so good. It had that positive earnings reaction. It broke out of this pretty textbook rounding bottom formation, and it's really just falling apart,
Yeah.
So from failed moves come fast moves in the opposite direction?
You got it.
So true. That's what's happening here.
To a big mega cap here, we got Apple. Taking a look at Apple next.
Cool. Did we get any time frames?
Let me check. 3 to 6 months.
Cool. That's helpful. So here's the daily chart of Apple. You can see it has resolved decisively. Pretty textbook distribution pattern that took place, carved it out last year. Apple peaked on December 26th, the day after Christmas here. So Apple, let's see. Let's zoom out and see if we can find some good fib levels. I think we could start out with the dot-com bubble peak and blow off there. So Apple, so this is a big level here, this 139, 140 level. So you can see that it stopped going up there, and then it flipped it into support, and then it broke out to new all-time highs. So from a long-term point of view, I like that 140 level, but we're looking at more of a 3 to 6 month time frame. So really, I think the trade here is you buy it above that 182 level, and then you trade it back towards that 220, that 218 level. It's kind of a range there. It's not really clear what the best level is, but the fib is 218. So that's how I see it. This could be a little bear trap, and then if you get a little scoop and score back above that 183, you could have a quick move towards that 218, but I wouldn't hold it any longer than that. What do you think, Patrick? What am I missing?
What a quick resolution from that kind of distributive top there over the last few months, right?
Authoritative resolution.
Right. It's almost reached that target in just like the last 3 days. It's just like a water. But I'd say 200 is a pretty important level to reclaim too. That's kind of where you topped out in 2023 a lot. So 200, but even then, I mean, the neckline's just right above that. So
you're saying target this shelf of former highs and not even look for a trade back up to this 218 level?
I mean, if it gets above that 200 level, I'd say you probably do get back to like 218 around there.
Yeah, but this is the first target,
right? But bottom line is there's just a lot of overhead supply, a lot of damaged levels. Yeah,
for sure. Let's look at RSI here. This is the daily RSI hitting the low 20s. The weekly RSI is also getting oversold. It's right there right now. So yeah, definitely sold out in the very short term. But we'll have to wait and see how that oversold bounce shapes up.
Yeah, if we do get that weekly close in oversold territory, that'd be the first weekly RSI oversold since 2018.
Yeah, wow.
Right, so quite a loss of momentum. It's not like we're looking at these things when they were making all-time highs and trading them back to the all-time highs. Now you're dealing with some of that overhead supply that's been created in the last just few days.
Yeah, pretty yucky, Patrick. You can see though, once it hit that oversold rating, it did take several weeks to repair that damage. It wasn't just an immediately V bottom higher, but you did get a pretty significant rally from there. 400% over the next 4 years, 3 years.
True.
Over longer time frames, these weekly oversold readings tend to be great times to buy if you do have conviction in that long-term uptrend, which I think a lot of people do think that Apple is not going anywhere. I'm not the one to say, but that's something to think about. Buying the dip in long-term uptrends, not a bad strategy.
Yeah. And I'm sure some of the selling the last few days is probably a result of like forced selling, people using Apple as a source of funds, selling what they can, right?
Yeah. Let's look at Apple relative to the S&P, because this is one of the largest components of the S&P 500. It is one of the largest stocks in the world, so that makes an awful lot of sense. And you can see that it hasn't done great. Like it's gotten killed in relative terms, but it's down 10% relative to the S&P 500. So that's not good necessarily, but if you zoom out, you can see that structurally it's just in a massive range here in relative terms. So, and
it really has been for the last 5 years now, right?
Yeah,
basically since COVID.
Yeah.
Let's move on to the chat here. We got Wavy in the chat. How are you doing, Wavy?
Wavy, what's up?
He's asking about BTU. Massive failed top. Says he's feeling lucky.
Yeah, I don't know about this one, Wavy.
Body energy.
Definitely could be. So this is one of the largest coal stocks. Pays a 3% dividend, $1.25 billion market cap. And what I would look at here is this retracement level. So I think you could define risk at this 13 level. I think Wavy is also referring to this pivot low from December 2021. So that comes in right around 850. So if you want to try to catch the falling knife, I think that is a pretty logical level for the market to respect and potentially bounce off of. So yeah, I think you could catch the falling knife here at that 850 level with a target of that 13 and a quarter, and then potentially you get another bounce back up towards that 21. If this is in fact a failed top, but that is not the bet I want to make. I think this crude oil chart kind of depicts what's going on in the energy markets globally. You look at something like RBOB gasoline, it still has not resolved lower decisively. Same story for heating oil. It's still in a range, but crude oil being the largest, most liquid energy product in the world, I think this is the bellwether of the space. I think everyone's going to follow crude oil's lead here, and that seems to be lower. It's been dancing around in this tight range for years now, coiling up for its next big move, and that seems to be pretty decisively lower. So given BTU is in the energy business, I would expect this one to continue trending lower.
Yeah, and energy stocks, I mean, they were looking good up until last week, and then they got shot. I mean, energy was like the only place to hide in the 2022 bear market, and it was almost looking like deja vu, but then crude oil broke down and energy just totally followed it lower there.
So was that the worst week since March 2020? Is that right?
Yeah, I think it was like the worst week in 2 or 3 years, something like that,
So,
for energy.
okay, it was not worse than June 2022, which is interesting. The price did recover from that and make new highs. So, yeah, and weekly, this RSI is still hanging out in a bullish momentum regime. It got deeply oversold in that March 2020 sell-off. This weekly RSI got down to 11, which is just so insane.
Oh, man.
So potentially it has a lot more room to the downside, but for now, I think the ball is in the Bulls' court. They need to defend the shelf of former highs from 2016, 2017, 2018. It's very well defined there.
Yeah. Let's move on to AIG here.
Cool. So this is American International Group. This is now a $46.5 billion insurance company. Pays a 2% dividend yield. This was a big problem during the Great Financial Crisis. This one fell from peak to trough like 99.5%. Looked like a zero. It has not been a zero. This one came back, resolved this massive base. Let's see, that was the spring of last year. Let's see. Let's get an exact price. So I think, yeah, the 60, 66. So it looked like the beginning of last year was really when this one started to resolve higher. It consolidated above that level, flipped this former resistance into support. This is how I see it, Patrick. Tell me if I'm wrong or if you think otherwise, but I think it's as clear as this. Former resistance, 1, 2, 3, 4, now becomes support. I think this one could correct all the way back towards that 68 or 67 level. But I think the buyers will continue to show up there until proven otherwise. I think that's the way we want to treat the stock.
Let's see. ALHC. What's this one? Alignment Healthcare. Is that $3.5 billion?
Yeah, managed healthcare. So this is
Holding up quite well these last few weeks.
Yeah, that's right. From Orange, California. Interesting. So let's look at it relative to the S&P. You mentioned it's been showing relative strength, and here it is making new highs today in relative terms. Let's fib it out.
Out right now, right?
Say that again.
How many stocks can we say that about right now, huh?
Yeah, not a lot, Patrick. Not a lot. So this one's above the 38.2 retracement of this prior drawdown, which was pretty significant. And I think this one's heading back towards the 61.8 retracement, which coincides with that August 2022 peak. So I like this one a lot in relative terms. Let's see if we can look at some levels that make sense in absolute terms as well. And let's zoom out and use some weekly candlesticks here. It just seems like this August 2022 peak is really the level of interest here. This is where you want to get involved. You can see the market acknowledged this level last week, and the weekly candle shaped up to be some type of indecision candle. If this one follows through lower this week, then I would expect it to enter some new corrective wave, maybe carve out some type of handle here, and this would turn into some larger cup and handle structure. But no, sure enough, buyers are showing up today. They look poised to break this one through this 19 level. But yeah, I think that's the trade. It's clean, it's clear. If this one's above 19, it even coincides with that retracement level. I mean, how nice is this, Patrick? I mean,
Yeah.
is this like this has to be the chart of the day? I don't think we're gonna find a better chart than this.
I mean, it definitely seems to be respecting those fibs pretty well, right?
Yeah, I love that. I love that so much. So 19 will get you to 28 and a half. I think that's all we have to say about this one. And this one's likely to be the chart of the day. Shout out whoever brought this one along. We have a name.
Let's see. That one comes from Mr. Zerby.
Mr. Zerby. Shout out Mr. Zerby. Bring in the fire.
Bringing the relative strength, yeah.
I love it. This is great.
So up next we got from Dan, we got ATAT.
Okay. So this is a Chinese hotel and resort stock. Is that right? Yep, from Shanghai, China. They have some hotels. The Z Hotel. Let's see. Let's look at a line chart here. I think this is the level to trade against, this 29 level. So the stock went public back in November 2022, immediately rallied 150%, and then corrected for several years. When it climbed out of that corrective wave, it peaked at this exact same level it did after its IPO. So I give a ton of importance to this 29 level. Resistance. Turned into support briefly, and now we're back below it. So I think this is one you want to stay away from in the very short term. We were talking earlier in this episode about from failed moves come fast moves in the opposite direction. So for now, this one's likely heading lower. You could find some support here at 25 in the short term, but I think if that doesn't hold, this one's likely heading back towards this 20 level, and that would be pretty ugly and not something you want to be involved in. So I think you want to let this one prove itself and close back above 29, and then we can talk about potential targets from there. I think this one ultimately could get up towards that 38 level. But for now, I want to see it. What do you think, Patrick? What did I miss?
Yeah, I would agree. I think you got to see it above that 29, and with the rest of China melting down, I don't think you want to press your luck too hard with some of these fail breakouts.
Right, for sure.
So
but it is showing relative strength. It's only down 1%. So let's look at it relative to FXI. And then, wow, that's just a big mess. Not much to say about that. You want to see this one break out to new all-time highs in relative terms, but over very short time frames, it is showing relative strength. Look at this, up 7% today. It's not something to sneeze at.
On a relative basis, you're saying?
Yeah.
And it's got this gap here. I don't know if you saw that one in the daily Must be an earnings gap or something. But it's trying to hold it right between 24 and a half and 22 and a half.
Yeah, yeah, for sure, Patrick. I think that's where this one's likely heading to. You know, um, yeah,
Let's
very ugly in the short term, but
let's
structurally, I like this one a lot.
take a look
I
at
like the short-term relative strength too.
QBTS.
QBTS. This is the D wave. This is one of the quantum darlings. So this one is about $2 billion in market cap. And here's why I call it a darling is from the August 5th low, or I guess it turned out to be the August 8th low in this case. This one rallied 1,400% in practically a straight line. Not a lot of charts look like this. This is like the I don't know, look at like XRP. Like it did something very similar, just like straight up turbo charged higher. So that's what it reminds me of. You know, the RSI held above 70 for weeks at a time. It was such an epic uptrend. But Patrick, you know that SPAC level on a lot of charts turns into to resistance. You know, there's a lot of bag holders that bought up here, and they want out of this now that the price has reached that level.
Yeah, it seems every time it tries to revisit it, it just gets slammed down again, right?
Yeah, I've seen it too many times to ignore this SPAC level. The market really respects it, and I think there's something there for sure. So yeah, this one looks really heavy right now. You have some type of peak, a little basing pattern. You tried to break out, you failed miserably, and here you are, likely heading back towards at least this pivot low at 4.5. But ultimately, I think this one has to revisit this former base. So this one could be trading with a 2 handle before long, for all we know. I think this is one you want to stay away from, though, for a while. I think if we are wrong and the market does prove that this overhead supply has been absorbed, I think we'll get confirmation on a close above this pivot high from March. And that's about $12. So a close above $12 would lead to new all-time highs, I think. But at this point, I need to see it, and highly doubt that's going to happen anytime soon.
Let it prove it to you first, right? It would have to double to get that confirmation from here.
Right? Yeah, for sure.
This
This is a crazy one.
I think that's all we got for today. But what do you think? I feel like this is a pretty easy one for favorite chart here.
Yeah. What was that ticker? Alignment Healthcare, ALHC.
Yep.
I mean, look at this, Patrick. This
know,
is what you want to look for in times like this, where the market is freaking out. This one's completely bucking the trend, showing a tremendous amount of relative strength. And the setup is perfectly clean and clear. 19 is the line in the sand. If this one can get above 19, I'm going to take a shot at it with a target of that 28.5. Do you disagree, Patrick?
No, I think
that makes better chart.
I think that makes perfect sense. And if you do get a turnaround in the market, something like this that did help hold up relatively well, you know, like you said, if you get that 19 to 28, I think that's a perfect way to play it.
For sure. Yeah. Of course, the market is really crazy right now, and we want to let this one prove it to us that it deserves our capital. So wait for confirmation, which is a close above 19.
Yeah, couldn't have said it better myself. Well, hey, that's all we got for today. But if we didn't get to your ticker, or if there's one in mind that you want us to look at, be sure to join us next week and email us at questions@stockmarketmedia.com. And we'll be sure to look at it at the top of the show.
For sure. Stay safe out there, everybody. Crazy times we live in right now.
You got that right. Cheers.
Yeah.
Thanks.
Cheers.